Hello everyone, I hope you're doing well today, and I want to take a moment to welcome you to Value Edge, the place where we try to understand the world, the trends, the financial storms, the hidden opportunities, and the truth behind what is happening around us. Before I begin, I want to ask you for one thing. If you enjoy deep analysis, simple explanations, and powerful insights into money, business, and the future, then make sure you subscribe to the channel and turn on the notifications, because the world is changing fast, and missing information today can cost you a fortune tomorrow. Now let's get into something serious, something that many people are still not paying attention to, something that is quietly growing under the surface, something that feels like a shadow of the past, the auto subprime crisis. And the big question is 2025 turning into the next 2008? And you hear the words subprime crisis, your mind automatically goes back to 2008. The financial meltdown, the collapse of big institutions, the fear in the markets, people losing their homes, their jobs, their savings, and the shock that spread across the whole world. But now in 2025, a similar pattern is starting to emerge, not through houses this time, but through cars. And this is where things get interesting, because the moment people start buying things they cannot afford using loans that are extremely risky, and lenders start approving loans without strict checks, history begins to repeat itself. And if there is one thing we know about history, it's that it doesn't repeat exactly, but it does rhyme. And right now the rhyme feels very familiar. So let me take you slowly into the heart of this crisis, because understanding it doesn't only help you protect yourself, it helps you grow wiser, calmer, and more aware. When people understand what's happening, fear goes down and clarity rises. And clarity is the biggest weapon anyone can have in a world full of confusion. Let's start with what a subprime loan actually is. A subprime loan is a loan given to someone who has a weak credit score, someone who is financially unstable, or has a history of payment problems. In simple words, these are high-risk borrowers. Companies know they might not repay easily, so they charge very high interest rates. Now think for a moment, what happens when millions of people with weak financial backgrounds start taking expensive loans for cars, and the companies issuing these loans start doing it carelessly? You get an unstable balloon, a balloon slowly getting bigger, waiting for a spark to burst, and that is what is happening in 2025. The auto market in the US and many other countries has been under stress for the past few years. Prices of cars went up massively, new car inventory went down, interest rates went up, consumers' incomes didn't rise enough, yet people kept buying cars. Why? Because cars are essential. You can't live, work, or move in many places without a vehicle. This created a situation where people were willing to take any loan they could get, even expensive ones, even dangerous ones. This is where subprime auto lending became a booming business. Lenders thought they were safe. They thought, well, it's just a car, we can always take it back. But they forgot one thing. Repossessing a car is easy, but recovering the loan value is not. Once used cars drop in price, lenders start losing money fast. And right now, used car prices are falling. This means the safety cushion lenders believed in is disappearing. And here is where the 2008 comparison becomes frightening. In 2008, lenders believed housing prices would always rise. They believed they could always take the house back and sell it for more. They believed nothing could go wrong, and then it did. Prices collapsed. The belief collapsed. The system collapsed. In 2025, the same overconfidence is happening again, except this time the asset is not a house, it's a car. But the issue runs deeper. Cars are not like houses. Houses generally go up in value long term. Cars always go down in value. So the risk in auto loans is automatically higher. And yet lenders kept pushing these loans without thinking of long-term consequences. They kept approving more and more subprime borrowers, creating a cycle of false growth. Now let's look at the situation from another angle. When interest rates went up in 2022, 2023, and 2024, everything became more expensive. A car loan that used to cost $400 a month suddenly costs $700 or even $900 a month. For a normal family, that is a huge burden. Subprime borrowers especially started falling behind on payments, and today delinquency rates, the number of people who cannot pay their car loans, are at the highest level in decades. This is not a small signal, this is a red warning light. Lenders have started to panic quietly. Repossession companies are busier than ever before. People are losing cars faster than they did in the past 15 years. And when lenders lose money, the whole chain gets affected. Car dealers, banks, insurance companies, manufacturers, even job markets. This is how a small small spark becomes a wildfire. But the story doesn't end here. There is something even more interesting happening. Why did people become so dependent on loans? Because modern marketing, social pressure, and lifestyle expectations have convinced people that they need a better car, a newer car, a bigger car, even when their finances don't allow it. And companies benefited from this weakness. They pushed loans with low initial payments, low credit requirements, and high approvals. People took loans they never should have taken, and companies gave loans they never should have approved. This is where the moral question enters. Who is responsible? The borrower who ignores reality, or the lender who ignores the borrower's ability to pay, or the system that encourages spending without thinking, or the culture that teaches people that their worth comes from what they drive, not who they are? In truth, everyone is responsible, because crises don't come from one mistake. They come from thousands of small mistakes happening together. Now let's connect this with one more hidden layer: banks. Banks don't hold all these auto loans. They package them and sell them to investors. Yes, this is the same thing that happened in 2008 with home loans. When risky loans are packaged and sold as safe investments, a dangerous illusion is created. Investors think they are buying something low risk, but in reality, they are buying a ticking time bomb. And when the bomb goes off, the shock spreads everywhere. Right now, companies dealing in auto loan securities are under pressure. Defaults are rising, repossessions are rising, loan values are falling, and investors are getting nervous. Nervous investors behave in strange ways. They pull their money out fast. And when money starts moving fast, systems begin to shake. This is the same trembling feeling that existed before 2008. But let's pause for a moment. Does this mean 2025 will be exactly like 2008? No, crises never repeat exactly. But does it mean 2025 could create a chain reaction similar in energy, similar in pattern, similar in danger? Absolutely yes. The auto subprime crisis may not collapse the world, but it can trigger a bigger financial reaction. In a connected world, one crisis feeds another. When people lose cars, they lose jobs. When they lose jobs, they stop spending. When spending falls, businesses suffer. When businesses suffer, layoffs start. When layoffs start, the economy slows. And when the economy slows, fear rises. Fear is the real virus that destroys economies, and fear is rising in 2025. Now let me take you deeper into the psychology behind this crisis. Why do people keep repeating the same mistakes? Why does humanity fail to learn from history? Why do lenders keep approving loans blindly? And why do borrowers keep accepting unrealistic terms? Because humans want immediate comfort more than long-term stability. Because instant gratification feels better than disciplined patience. Because emotions often beat logic. And because society praises consumption, not wisdom. But crises have a role. They wake people up. They force systems to change. They expose weaknesses. They break illusions. They purify markets. The question is, are we aware enough to see the warning signs before the breaking point? In 2025, the auto subprime crisis is not just about cars. It's about financial discipline. It's about risk management. It's about consumer behavior. It's about corporate greed. It's about economic fragility. It's about repeating the same storyline with different actors. But this is also a moment of opportunity. Whenever a system cracks, it creates space for new ideas, new companies, new strategies, and new leaders. People who understand the situation early become the ones who rise later. And this is why I'm sharing this with you, because awareness is power. Awareness is the beginning of control, and control is the beginning of growth. If you understand why this crisis is happening, you can protect yourself from financial traps. You can avoid unnecessary debt. You can make smarter decisions. You can build a stronger financial foundation. You can prepare for the future with a clearer mind. And preparation is the difference between those who survive storms and those who get washed away by them. Let's talk about what happens next. What does the future hold? What should we expect in the coming months and years? First, repossessions will rise further. More people will lose their cars because payments are too high. Second, used car prices will drop even more as supply increases. Third, lenders will tighten their requirements, making it harder for people with weak financial backgrounds to get loans. Fourth, the auto industry will face slowdowns. Fifth, some lenders may collapse or merge to survive. Sixth, inflation pressure. Households will cut spending, slowing the economy further. Seventh, governments may step in with regulations or relief measures. This is the chain reaction forming quietly. But there is also a positive side. When crises happen, prices fall, opportunities appear. Markets reset. Wise buyers wait for moments like these. The people who suffered in the past become smarter for the future. Let me give you an example. In 2008, when housing prices crashed, most people panicked. But a few people saw opportunity. They bought properties at low prices, and years later they became wealthy. Crises punish those who are unprepared and reward those who are patient, calculated, and informed. So what should you do now? You should observe, you should learn, you should plan, you should avoid unnecessary loans, you should build savings, you should strengthen your skills, you should be ready for opportunities that will show up when others are afraid. Fear creates confusion, but awareness creates confidence. And confidence is what you need the most during uncertain times. Let's come back to the core question. Is 2025 becoming the next 2008? The answer depends on how deeply this crisis spreads. If the auto subprime bubble bursts violently, it will affect the consumer credit market, the job market, the retail sector, and even the financial sector. But even if it doesn't collapse everything, it will still shake many people's lives. It will hurt families financially. It will disrupt industries. It will force companies to change their strategies. 2008 was a global earthquake. 2025 might be a smaller earthquake, but still powerful enough to shift the ground beneath us. So what do we learn from all this? We learn that financial knowledge is not optional anymore. Understanding loans, interest rates, asset values, and economic cycles is no longer just for experts, it's for everyone. Because every person's life depends on the economy in some way. People who understand money survive better. People who understand debt avoid traps. People who understand markets prepare early. People who understand cycles stay calm when others panic. This is the purpose of Value Edge. Not to scare you, not to confuse you, but to help you grow wiser, stronger, and more aware. Because knowledge is wealth and awareness is freedom. Oh, as we move further into 2025, keep your eyes open. Study the patterns. Watch how lenders behave. Watch how car prices change. Watch how people respond. Watch how the market shifts. Because in these shifts, there are lessons. And in these lessons, there are opportunities that bar. Indeed, remember one thing, crises don't come to destroy you, they come to test you, they come to shape you, they come to build a stronger version of you. As long as you stay aware, disciplined, and calm, you will not just survive, you will rise. Thank you for spending your time with me today. If you found value in this long conversation, make sure you subscribe to Value Edge, because the only edge that matters in the future is awareness. Stay prepared, stay smart, and stay